Missed Palantir? Four AI stocks under $10 set to explode in 2026. Palantir just crossed $178 per share. If you bought back in 2020, you'd be up over 800% right now. But here's the reality. Most people miss that boat, and the stock is expensive. What if I told you there are AI stocks trading under $10 right now that could potentially deliver similar explosive returns? Today, I'm breaking down four AI stocks all under $10 that Wall Street is sleeping on. These aren't just cheap stocks. These are companies deploying real AI technology solving real problems. Let's dive in. Before we get into the stocks, you need to understand why the AI market still has massive room for growth. The global AI market was worth about $184 billion in 2024, and it's projected to explode to over $800 billion by 2030. That's more than quadruple in just 6 years. Here's the key insight. Palantir, NVIDIA, Microsoft, they're all amazing, but they're expensive. Palantir at $178 means you need serious capital. But AI isn't just about the big players. There are dozens of smaller companies using AI to transform industries, like transportation, defense, voice technology, and robotics. These companies are trading under $10 because they're earlier stage, smaller cap, and Wall Street hasn't fully priced in their potential yet. The AI application market is still in the first inning. We're talking about companies building the infrastructure and tools that businesses will need as AI becomes mainstream. So if you missed Palantir at $20 or NVIDIA at $50, there are still opportunities in the AI space if you know where to look. Stock number 1 is SoundHound AI, ticker SOUND. As of early February 2026, SoundHound is trading around $8 per share with a market cap of about $3.5 billion. This is a pure-play voice AI company, already generating real revenue with real enterprise customers. SoundHound develops voice AI technology that enables natural conversations between humans and machines. They license their technology to businesses. Their Houndify platform powers voice assistants in cars, restaurants, smart devices, and customer service applications. Here's why SoundHound is interesting. First, massive traction in the automotive industry. They've partnered with major car manufacturers to integrate voice AI into vehicles. When you're driving and say, "Find me the nearest gas station," that voice recognition is often powered by SoundHound. Second, they're expanding into the restaurant industry with AI-powered ordering systems. They recently expanded their partnership with Five Guys to deploy AI ordering agents. This is huge because labor costs in restaurants are crushing margins, and AI can reduce costs while improving accuracy. Third, revenue grew 68% year over year in their most recent quarter, and they're raising full-year guidance. Now, they're not profitable yet and still burning cash, but revenue is scaling fast, which is what matters for a growth company. Analysts have a consensus moderate buy with an average price target around $15. From the current price of about $8, that represents nearly 90% upside. The risks? Still unprofitable. The stock has been extremely volatile, hitting over $22 in late 2024, then pulling back over 60%. They face competition from Amazon, Google, and Apple, who all have voice AI divisions. My take? High risk, high reward. If voice AI adoption accelerates, this stock could double or triple. Risk rating 7 out of 10. Upside potential 8 out of 10. Stock number 2 is Rekor Systems, ticker REKR. As of early February 2026, REKR is trading around $1.13 to $1.59 per share with a market cap of only about $150 million. Yes, this is penny stock territory, but the technology is genuinely interesting. REKR provides AI-powered roadway intelligence systems. They use computer vision and machine learning to analyze traffic patterns, vehicle movements, and roadway activity in real time. Think of them as the eyes and brain for smart cities. Their technology can identify vehicles, read license plates, track traffic flow, and provide data to government agencies. Why REKR could be interesting? First, they've been winning government contracts with multiple U.S. states for traffic management and public safety. Government contracts are sticky, meaning recurring revenue potential. Second, they introduced new AI products like REKR Discover and REKR Command, which are software as a service, generating recurring revenue. Analysts have an average 12-month target price around $4.50, from the current price of about $1.13 to $1.59. That represents anywhere from 180 to 300% upside. Now, the risks. This is extremely risky. The stock was over $25 in 2021 and is now under $2. That's over 90% drawdown. They're still losing money, and revenue has been inconsistent. There's risk of dilution. My take? This is the highest risk stock on this list, but also potentially highest reward. I would only put 1 to 3% of a portfolio into this and be prepared to lose it all. But if smart city adoption accelerates, this could be a 3x to 5x play. Risk rating, 9 out of 10. Upside potential, also 9 out of 10.
Stock number 3 is Veritone, ticker VERI. As of early February 2026, Veritone is trading around $3.31 to $3.67 per share, with a market cap of about $330 million. Veritone provides enterprise AI solutions focusing on media, legal, government, and energy industries. Veritone operates the AIware platform, which is an AI operating system that uses machine learning to help organizations process and analyze massive amounts of unstructured data. Their platform transforms unstructured data like video, audio, and text into actionable insights. Why Veritone is interesting? First, they serve multiple industries, which provides diversification. Media companies use their technology for content management. Law enforcement uses it for evidence management. Energy companies use it for infrastructure monitoring. Second, they've been pivoting to higher margin software. In their most recent quarter, software products and services revenue grew by 55% year over year. Third, they have government contracts, and their platform is FedRAMP authorized, meaning it meets federal security standards. Analysts have a consensus strong buy rating with an average price target around $10 to $12, from the current price of about $3.31 to $3.67. That's nearly 200% upside. The risks? Veritone has struggled with profitability, and revenue actually declined in 2024 compared to 2023. The stock has been volatile, and they face competition from larger tech companies. My take? This is a turnaround story. If they can stabilize revenue, improve margins, and demonstrate a path to profitability, the stock could re-rate significantly higher. Risk rating, 7 out of 10. Upside potential, 8 out of 10. Stock number 4 is Lantronix, ticker LTRX. As of early February 2026, Lantronix is trading around $6.21 to $7.20 per share, with a market cap in the range of $240 to $270 million. Lantronix is a global leader in edge AI and industrial IoT solutions. Lantronix provides intelligent computing, secure connectivity, and remote management for mission-critical applications. They serve smart cities, enterprise IT, and commercial and defense unmanned systems, including drones. Here's why Lantronix stands out. First, significant exposure to the drone market, which is exploding. They recently raised their fiscal 2026 drone revenue outlook to $8 to $12 million, up from previous guidance. This signals strong demand in the unmanned system space. Second, they're winning design wins with drone manufacturers for defense and autonomous applications. The defense drone market is expected to grow massively. Third, solid execution. They reported revenue of $29.8 million in their most recent quarter and raised guidance. The company is generating positive non-GAAP earnings per share, showing they're managing profitability, not just chasing growth. Analysts covering Lantronix are bullish, with several maintaining buy ratings and an average price target around $7.88 to $9. The risks? Lantronix operates in a competitive market, and drone regulations can impact demand. They're exposed to government spending cycles, which can be unpredictable. The stock has been volatile. My take on Lantronix? This is one of the more fundamentally sound names on this list. They have real revenue, improving profitability, and exposure to high-growth markets like drones and edge AI. If the drone market continues expanding, they could deliver strong returns. Risk rating, 6 out of 10. Upside potential, 8 out of 10.
Before I give you my rankings, let's talk about risk management, because this is critical when investing in small-cap AI stocks. First rule: Position sizing. Never put more than 3 to 5% of your total portfolio into any single small-cap stock, especially ones under $10. These can be extremely volatile, and a few bad quarters can tank the stock 50% or more. Second, use dollar-cost averaging. Don't go all in at once. Spread your buys over weeks or months to smooth out volatility. Third, set stop losses, or at least have a mental exit plan. Decide in advance how much you're willing to lose and stick to it. If a stock drops 25 to 30%, maybe you cut your position in half. Fourth, diversification within the AI sector. Don't just buy one of these. Consider spreading across 2 or 3 to reduce single stock risk. And finally, only invest money you can afford to lose completely. Small cap stocks can go to zero. Treat this like venture capital, not your retirement fund. If you follow these rules, you can participate in the upside while protecting yourself from catastrophic losses.
All right, let's wrap this up. 4 AI stocks under $10 that could potentially explode in 2026. Here's my personal ranking based on risk-adjusted returns. Number 1, Lantronix. Strongest fundamentals, exposure to drones, improving profitability. Number 2, SoundHound AI. Massive revenue growth, voice AI has huge potential but still unprofitable. Number 3, Veritone. Turnaround story with upside if they execute, but riskier. Number 4, Rekor Systems. Highest risk, highest potential reward, only for aggressive speculators. Now, here's my critical disclaimer, and please listen carefully. I am not a financial advisor. This is not financial advice. This video is for educational and entertainment purposes only. These are all speculative, high-risk investments. Small-cap AI stocks are volatile. Companies can and do go bankrupt. You could lose 100% of your investment. Never invest more than you can afford to lose completely. Always do your own research, read the financial statements, understand the risks, and consider consulting with a licensed financial professional before making any investment decisions. That said, if you believe in the AI revolution and you're looking for asymmetric upside opportunities, these 4 stocks are worth putting on your watch list. The infrastructure for AI is still being built, and many of these companies are positioned to benefit as AI becomes mainstream. Which one would you buy? Drop a comment below, and if you found this breakdown valuable, smash that like button and subscribe. I'm analyzing undervalued stock opportunities every single week. See you in the next one.